Harshman will be here. He's trying to get on by telephone, so we'll try to make that work as well. This is the second meeting of the Property Tax Working Group. We're having this meeting in anticipation of the full Revenue Committee meeting a little bit later in September, mid-September. And so per our request, staff has done a lot of work to develop a pretty good memo and matrix. So if there's no other preliminary remarks, I might shift it over to our capable staff to lead us through their research. Is that all right? Josh, would you and Dean like to go ahead?
Sure thing, Mr. Chairman. I think this is available online. It was also sent to the committee, and Emily is going to share the document so everyone can see it as well. So yeah, as you noted at our last meeting back in June, there were a number of topics under discussion, a number of kind of proposed property tax relief options that had been brought to the committee in one form or another. And the request from this working group was to kind of put those all in one document. We had noted kind of throughout some potential legal questions about some of these options. And then there was also a request for the fiscal impact. And so Dean and I worked together to put together this matrix of these options, along with an estimated fiscal impact if we were able to determine one, as well as I developed kind of, as I started looking at these, they seem to kind of form into three different categories of legal questions. And so I'll just briefly describe those before we get into it, Mr. Chairman. And then this is primarily dealing with Article 15, Section 11 of the Constitution, which we discussed somewhat at the last meeting. I went through a document that talked through the history of property taxes and the adoption of the current language of Article 15, Section 11 of our Constitution, which requires property to be uniformly valued at full value as defined by the legislature in three different classes. Again, those are mines and mineral products, industrial property, and then all other property. And so here, when we're talking primarily about residential property, that's within that third category of all other property. And so those three categories I kind of found as I was looking at these, I kind of determined those as those options, potential options that have a strong argument that they may violate the Constitution. And those would be options that tend to affect the assessment of property, or that would create subclasses of property that would be assessed at different rates, which is prohibited by our current constitutional language. Then there's those that are, I thought there would be a possible argument of constitutional violation. Those do not affect how property is assessed, but could potentially be argued to create subclasses of property or affect taxation being equal and uniform within each class. And then the third category is those with little to no argument of constitutional violation. And those options do not seem to affect the assessment of property and do not seem to create any kind of subclass of property. And just a final caveat before we get into these options, Mr. Chairman, is, as I think I discussed at the last meeting, this constitutional language is fairly unique to Wyoming. It appears to be unique to Wyoming. So there aren't a lot of cases from other states we can look at. And in this context, the language hasn't really been interpreted to a great extent in Wyoming. So A lot of this is just going based off of the constitutional language. And as such, I think we were fairly conservative of which category we placed options into. So, if it was on the line between little argument or possible argument, it would be in the possible argument category. And same with a possible argument and a strong argument. If we weren't sure, it would be in the strong argument category, again, just to make sure we were provide information to you guys so that you would have all of that in front of you. So, Mr. Chairman, we'll just go quickly through these options, and Dean will jump in and provide information on the fiscal impact. So first option is just a decrease in the number of mills. And again, all these first ones will be little to no argument of violation. They do not affect the assessment of property or create any subclasses.
Okay, and just to point out, statewide mills, really the only ones we have are the education mills, right?
That's correct, Mr. Chairman.
So everybody just remember, I think there's 6. Is that right? Or is it 4, 6?
There's a large number of statewide mills.
Oh, you're talking about the county assessed, but for education.
There's different ways, yes. Yeah, so there are I believe the 8 mills that are for education statewide, but then there's also the 25 mills that are county assessed but are statewide. And Dean can get a little more into that, Mr. Chairman.
Okay. All right. Thank you.
And actually, Mr. Chairman, there's 12 mills that go directly to the school foundation program. And then there's the 6 county mills and the 25 district mills. Those 31 mills make up the local resource. So the total number of mills dedicated for education is 43, which represents about 60% of the total mills, assuming a 72 mill average, which is an average mill levy that you see within the municipalities.
Okay, thank you. Hey, and everybody on the call, I can't see everybody on my screen because I've also got the memo up. So please just interrupt us if you've got a question for staff during this memo, okay? So Dean, there are no mills relating to anything else than education. Would that be fair?
Mr. Chairman, the 12 mills to the school foundation program, the 6 mills to the county for education, and the 25 district mills, those are the specific mills that are set in statute. The rest of them are established more as maximums. In other words, the counties have a maximum of 12 mills. The municipalities have a maximum of 8 mills. And then there are also the community colleges also have mills. Also, the 7 community college districts all have at least 5 mills assessed. Some have more. And then, of course, the mills for special districts vary quite a bit across districts and across the state.
But none of those would be uniform statewide. So they wouldn't come under the 22.7.
Mr. Chairman, the 22.7 is actually based on 1 mill on the total assessed valuation, reflected in the January 2022 Craig forecast. So one thing I would say, these estimates could change a little bit after the October 22 Craig forecast is released. But that 22.7 is 1 mill on all assessed property, including minerals.
Right. Okay. Any questions? I can't see anybody. All right, let's keep going.
All right, Mr. Chairman, next option, again, in that same category of little argument or violation, is reducing the 9.5% assessment ratio. And we note there that this would impact commercial property in addition to residential property. Same, I guess, with the mills, Mr. Chairman, also would affect that. And Dean, turn it over to you.
Thank you, Josh, Mr. Chairman. And actually, I should have pointed out, made sure we included in the matrix, this estimate is an estimate of reducing the 9.5% assessment rate on all other property to 9%. So it's just a 0.5% decrease. And this estimate is based on the most recent actual assessment of the non-mineral property in the state, specifically and again, like Josh said, the all other property includes residential, it includes commercial, it also includes agricultural property. However, in looking based on the 2021 tax year, residential property made up right around 75% of the total of the 9.5% property. Commercial property makes up a little bit less than 20%. And then ag property makes up actually less than 5%.
And just to be clear, there's a limit to how far we can do this because of the requirement to be within a certain percentage points with the rest of the property, the industrial property. Would you explain that?
Yeah, Mr. Chairman. So under the Constitution, all other property cannot be more than 4 percentage points away from the industrial property. So which is currently set at 11.5%. So if you wanted to go lower than 7.5%, you would have to also bring down the industrial property rate.
So everybody, this could be a very powerful tool for tax relief because you could go down to 7.5%, which would be multiple times the 37.2 million, and you have a lot of tax relief, but it would really hurt the same amount of tax relief as revenue to the state. We just have to remember that. And would be giving tax relief to a lot of property perhaps that arguably doesn't need it. Certainly not just targeting residential. Are there any questions?
Senator, Mr. Chairman.
Go ahead, Representative Yen.
Mr. Chairman, thank you. The one question I have is, does this also affect the tax revenue to local governments? Thank you, Mr. Chairman.
And I think the answer is it is, Dean or Josh, or it does.
Mr. Chairman, as it says in that box on the matrix, that 37.2 million, it is broken out. The impact would be roughly 6.2 million to the school foundation program. The local resource, that's referring to the 31 mills, which is also K-12. That piece is 16.0 million. And actually the remaining 15 million would be of other mills assessed. County mills assessed by municipalities, the colleges. So yes.
There you go. And remember, this is the 37.2 total is per 0.5%.
That's correct, Mr. Chairman.
So anybody else have a question? I can't see you, so you have to speak up. Okay, keep going.
All right, next one, Mr. Chairman, is to re-implement or amend the elderly and disabled program, which is currently in 3911-109C. Again, same category with a note that that type of relief has currently been given approval by the courts under the ability of legislature under Article 16, Section 6 to provide for the necessary support of the poor. So if the income requirements were significantly changed or increased, that could affect that category of legal concern.
Okay.
Mr. Chairman, I would jump in and just say that actually while this program is still currently in statute, it has not been funded since 2015. So it's been out of commission for a while just because it has not been funded by the legislature. I did contact the Department of Health specifically for these estimates, and the estimates reflected on the matrix are largely based on the historical claims filed and paid out under this program by the Department of Health, based on roughly 7,000 applications per year, resulting in 6,000 claims, just because not everyone who applies qualifies, with an average claim of roughly $630 per claim. I would point out about this one as well, this is not strictly a property tax relief. This is considered general tax relief for the elderly, those 65 and older, and for people totally disabled. You will also see the Department of Health also provided some estimates for the administrative impact of this, what it would cost for them to pick up this program again, including a little bit more than $163,000 per year for administration. And they also estimated startup costs of $125,821, largely to get their computer system going again, up to date. This system is not running anymore, and they would have to reestablish their computer system, which gives them access to data so they can field these claims. So this is, like I said, an estimate largely based on what the history of this program has been.
Okay, any questions from anybody?
Mr. Chairman, this is Pat. Pat.
Go ahead.
So, Dean, in looking at that, was there a feeling that my feeling is this would double, at least, with what we've seen across the state in property tax increases. Is there any way of knowing that double or triple or whatever? Any thoughts on that?
Go ahead, Dean.
Mr. Chairman, Representative Sweeney, I actually did pose that question to the Department of Health, but as I said, they really no longer have access to the data in regard to qualification for this program. So they declined to try to provide any more recent estimate of what it might be now. Keep in mind that this program, it is always based on just the amount appropriated by the legislature. If it turns out that they have a lot more claims, or the amount of the tax relief increases, the total relief provided still has to fit within the appropriation, and they reduce those refund claims accordingly. So they basically said, whatever you want to appropriate, we'll pass out. But yeah, I asked them several times, even like if the components of the program were increased by inflation, what would it look like? And they declined to try to give me any type of estimate as far as that goes, without access to the data they would need.
Mr. Chairman, a follow-up. Really, maybe thank you, Dean, for posing those questions to the department. Moving forward, Mr. Chairman, I think, if we're going to pose something to the committee here in a couple of weeks, I think we should be prepared to either double or triple, and start it at maybe triple and whittle it down to double, in conversation, along with the monies for the startup and the administration of this. So nothing's for free. But just some general thoughts on this one, Mr. Chairman.
I understand. Anybody else? So, Director Henson, welcome.
Good morning. If I may,
Good
Mr. Chairman, I
Please
just
do.
wanted to mention that the majority of the applicants for this program historically have not been homeowners. You're not required to own a home to qualify for this program, and since it encompasses residents that are 65 years of age or older, or 100% disabled, 18 years old and 100% disabled. So just depending on to whom the subcommittee and the revenue committee wish to provide tax relief to, I just wanted to clarify that this truly is not focused on homeowners.
Correct, and I appreciate that. It's also not income qualified, so. And Josh, you know, it says little or no argument for violation, but it's not necessarily necessary support for the poor. Do you guys think about that?
Mr. Chairman, I think if I was recalling that this one was one that had been challenged at one point, and that was how it had been upheld. I have to look back at that, Mr. Chairman, and
Okay.
double check that.
That's interesting to me. So, right, basically, everybody gets the same size check, if I recall, and it's irregardless of whether you own property or not, or pay other property taxes. You could literally pay zero property tax, I guess. So it's not exactly property tax relief. It was a very popular program. And is this the one that people called the Christmas bonus, if I recall? I think they did. And when we quit funding it, we got in a lot of trouble, but it is problematic as it's set up now. Anybody else? All right, let's keep going. Good job. Thank you, Ms. Hanson. Oh, who was that?
Mr. Chairman.
Go ahead.
EMT. Actually, there is income qualification to this program.
Okay, tell us more. That must be the way it survived the court test then. It's okay, Dana, when you find it. Maybe in a.
Mr. Chairman, I think what might help is that I could send an email that kind of describes what those qualifications are. Is it okay if I do that?
Absolutely. And
Okay.
maybe for the people online, after a little later, you can summarize them for everybody on the call.
Okay.
If there's no more questions, let's keep going.
Sure thing, Mr. Chairman. Next one again is the existing veterans exemption. Some sort of proposed amendment to expand eligibility for that. Again, and this is one that I believe also, although it was just for veterans, the court did say that this one fell within that Article 16, Section 6 exemption to provide for necessary support of the poor as well. And again, that's a little more nebulous than any kind of income requirements, and so just a note of caution there as well.
Okay. Any questions? All right, let's keep going.
Mr. Chairman, next one is to amend the property tax deferral program. There is a property tax deferral program in place, which would allow property taxes to be deferred until property is transferred. From my understanding, it is not currently used at all. So some amendment to that to make that more accessible. Again, because the property taxes would eventually be paid at a later date, I think there's at least a good argument that that does not violate the Constitution, as those taxes are still being assessed and paid.
Everybody familiar with this one?
No,
Ms.
not really, Chairman Case.
Okay, well, this one, it's a county administered program that would allow a homeowner to actually qualify and receive a break on their taxes, and they'd be deferred sometime into the future. And it sounded like it should be a great idea, but it's never been very popular. And I see Director Henson has her hand up. I'll yield to her.
Mr. Chairman, this program is available in Teton County.
Mhm.
I will state that the county government, the county commissioners, they have to promulgate rules, and they also have to fund that. So the taxes are actually paid in the current year. It's just that there are criteria by which, when certain events occur, then that is repaid to the county. But the cost of the program is by the county.
Right, and that's a very good point. So the county actually has to come up with a difference in the revenues somehow, and that's probably beyond the capabilities of some counties.
Mr. Chairman.
Representative Yan, please.
Mr. Chairman, so in 2021, I did get a bill drafted, but it didn't get introduced. That was for amending the program where the state actually wouldn't have to be made whole by county revenues, and it would only allow for you to apply for a lien if it increased more than 50%. So, and you'd get a 0% lien on it, where it's deferred until acquisition or you transfer, et cetera. So that was House Bill 180 in 2021. So that could be an option, but like Director Henson said, most people don't like putting liens on their properties. So I doubt it would be one that would be well picked up on, unfortunately.
So interesting enough, I've been experimenting with a bill in this area as well. I think that it'd be interesting to find out more why this program is so unpopular, but it's obviously trouble for the county. And I think to the person making the application, they actually have to go to the county and kind of make the request. It's kind of intrusive in a way. They have to disclose their circumstances and seek relief. I think people just don't want to do that. So I do have an idea that we can talk about later, but it would be for a program that doesn't involve the counties and actually would involve probably the private sector to fund this in a different way. So we can talk about that too, and we can talk about Representative Yen's bill as well. Any other questions on this one? Okay.
Yes,
Who's that? Representative Jennings, welcome.
yeah. So, Mr. Chairman, I think one of the distinctions that we should be making as we're going down through this is deferral is not relief. And if we're going to address relief, that's one thing, but deferral to be able to handle the current taxes, that's a different issue. And so it seems like we ought to differentiate those two.
I think that's fair enough. I think one key point about tax deferral is it does recognize that when our taxes go up, it is logarithmic. It's connected to a very large increase in your property value. So that if your taxes go up by $1, your property value, for example, is going up by considerably more. We could use $100 for an example. So there is a capability of paying, and the taxes in a sense are not excessive in relation to the value of the property. It's just that these people don't have the income, but yet their property is of substantial market value following our Constitution. So I do think there's room to think about these. Get back to you, Representative Jennings.
But Mr. Chairman, wouldn't that be an unrealized capital gains? I mean, they have asset there, but they've not realized the gain to pay those taxes. And so it seems like you're saying that they would have to sell that in order to, I mean, they have the asset, but they'd have to sell it. So they lose their home.
Well, no, it's precisely an unrealized capital gain. But it does realize that the property itself has gone up substantially. And so their wealth has gone up proportionally. What goes up can come down, but the general trend is up, but especially in these very inflationary times. So if your tax obligation goes up by $1, but your home goes up by $100 in value, for example, rough numbers, then there is an ability to pay. And there is an ability to put a lien on the property that can be satisfied at a future date, either when you sell or, the property's transferred. So, anything else? Let's go on to the next one.
So, Mr. Chairman, next one is to amend the current property tax refund program. Again, this is income limited, so the same note that if you significantly were to change that income requirement, that could affect the level of concern. Turn it over to Dean for the estimate, and Brenda's also here, or Ms. Director Henson, and she has noted that they've received a significant number of applications for this year, and I'm sure she'll talk to that.
Who do first, Dean? I'm not seeing Dean. Shall we go to Director Henson?
Mr. Chairman, yes, as of 5 o'clock last night, we've had 4,400 applications for the property tax refund program. Now, when we compare that to recent history, the highest number of applicants we had was in 2015, when we had a little over 2,500. It should be noted, we're still processing those. Of the 4,400 to date, we had 2,561 refund checks that we've already sent out. The total of those, 1,521,000. We're almost at 1,000,502. We anticipate we have about 500 that we're still processing, and we believe another $200,000 that we'll be sending out by September 30th. So that's going to be about $1.7 million for refunds for 2021 property taxes. So I do anticipate updating the Joint Appropriations Committee during the supplemental budget time to see if we can perhaps get some additional funds based on the interest that we had this year. Just to let you know, we had estimated $1.5 million per tax year based on 2015's $999,000 we refunded. So as you can see, income numbers have gone up. The 1/2 of the residential property tax amount for residential has gone up. So I will tell you, of the 4,400, we've had 1,263 that we have rejected, and almost all of those were based on the income numbers exceeding the maximum. And the maximum for income is 3/4 of the 2021 statewide median household income, which is $51,975, or then if it exceeds that for that county, which we only have 8, we've got 8 counties that exceeded that $51,975.
Right.
But for all the other counties, as long as you had an income less than that $51,975, you would qualify. So I think that should the committee wish to amend this program, I would encourage that the focus be perhaps changing that dollar amount to qualify. With that, I'd answer any questions.
Okay, any questions for Director Henson? So which way are you suggesting on the change the income, up or down?
Mr. Chairman, if the focus of this committee is to provide tax relief and broaden that opportunity, I would think perhaps up. Even if we went to 100% of the statewide median household income, that would open the door for more participation.
And then possibly you would suggest eliminating the county requirement, the county income requirement.
No, Mr. Chairman, I think the language as it's stated, where it's 3/4 of the median county income or that base of what the statewide median income is.
Catch.
I think that language is still appropriate. It's just a matter of what that median income benchmark is.
Gotcha.
The other criteria, of course, is there's a 5-year residency criteria on that program. In addition, there's an asset number. Right now, it was $133,000 per adult member in the household. And that's not including the home that you're asking for relief on, and it does not include one vehicle per adult member in the household. So, you know, that asset number could be changed as well. But I just wanted the committee to know that that does not seem to be what is eliminating the applicant from qualifying. It seems to be that income number that's the kicker.
All right, thank you very much for that. Committee, any questions? All right, we should keep going. And I don't think we really need Dean on this one, Josh. We know what we appropriated, and we understand that we're running out of money and probably going to need to appropriate more money in our next budget session.
Yeah, Mr. Chairman, and you'll see there that Dean did include a note that increasing the income limit to the median would increase it by at least $900,000 a year. And so the next two, Mr. Chairman, a homeowner's tax credit or a homestead exemption, we treated these essentially the same. Again, this would be a possible argument of violation, just because while it doesn't affect the assessment of the property, you know, there's some argument here that you know, you're exempting some properties but not others, so you're potentially creating a subclass. And I don't know if Dean is back to talk about this estimate of the idea here that was discussed was just taking for all owner-occupied homes, you get an exemption of the first 50,000 of market value. And I don't know if Dean is back to.
Yeah, Mr. Chairman, thank you, Josh. Thank you, Mr. Chairman. And actually, just an exemption of the $50,000 market value, that was actually just a suggestion from Chairman Harshman, actually, and an exemption of $50,000 of market value times the 9.5% assessment rate, assuming 72 mills, would result in a revenue decrease of approximately $56.6 million per year. And that's also based on Census Bureau estimate of owner-occupied homes. So this is a very broad estimate, if you will, but it was a specific parameter that Chairman Harshman inquired about.
Okay. Any questions? Everybody understand how this works? Everybody would get the same exemption or credit, however you want to call it, based. So $50,000 in value of your property, your home would not be taxable. And so it would obviously help those people with lower value homes the most. If you had a $100,000 home, your property taxes are cut in half. But if you have $2 million home, then it's a drop in the bucket for you. So it does work to target kind of towards people that we think maybe need the relief the most, perhaps. But on the other hand, it carves out within the all other property class just homeowners. We call it an exemption, and in the Constitution it says the legislature can provide for exemptions, but it doesn't give us much more guidance than that. Does this create another class or not, or is there implications there? That remains to be seen, but it does seem to get at something that we've talked about. So committee, any thoughts?
Mr. Chairman.
Representative Yen.
Mr. Chairman, thank you. So I do like the idea of owner occupied homes. My one worry is we have a large amount of renters in Teton County.
Yeah.
And if we don't target, if we only target owner occupied homes, I don't want to target second homes, but I also want to make sure that we could figure out how to affect the property taxes of those who rent, so we can theoretically have lower rents along the line with that relief as well. So something to think about. And a question for Mr. Tempe, do you know if the Census Bureau estimate of owner occupied homes only included that primary homeowners and not renter occupied homes?
Go ahead, Dean.
Mr. Chairman, Representative Yen, I am not sure about that.
So discussion on the rental units, it's kind of it's hard to think about how that could work out favorably. If you would extend it to rental units, and then you're trying to base it on the value of the rental units, thinking that that would get to the income level of the renters themselves, that's a possibility. But then you'd have to, the only way to guarantee that the owner would extend the credits to the renter is maybe to require that. That seems very intrusive. So that's a difficult thing to think about. Yeah.
Mr. Chairman,
Go ahead.
I just looked at the census data briefly. They basically break the housing out into three categories: owner occupied, renter occupied, and vacant. So that they give no indication as far as second homes or anything like that.
Right. Yeah. Okay. Further discussion? And these are both figured the same, the credit and the exemption. You can see they just did the same math. It's what we call it. Since the Constitution allows us to do exemptions, we'd be better off using that term. Ms. Henson.
Mr. Chairman, just one comment, just to identify the difference between this program, both the homeowner's tax credit, or if we were to put a homestead exemption into statute. Those are administered at the county assessor level and applied for it within that office. And then that assessed value is removed before it goes to tax roll. So the taxpayer itself never has to pay that, which is a big difference when you compare it to the property tax refund program, in that they have to pay it in order to get that refund. Just wanted to clarify.
Yes, and thank you very much.
Mr. Chairman, Mr. Davies and Ms. Huxtable were on and had their hands up, and I think they're being let into the room.
I think we should hear from them. Mr. Davis.
Yes, Mr. Chairman, thank you. I just had one question. I think I know the answer, but the veterans exemption is a very similar program to the homeowner's tax credit and the homestead exemption, but it's actually refunded back to the counties to reimburse them for that lost revenue. We reached out to the assessors to kind of discuss it, but no one could really remember for sure if this program had been refunded back to the counties. And I'm just curious what the intent of the legislation is at this point. Do you see it being reimbursed, or is that not really where we're headed?
I don't think I know. We've talked about the legislature keeping everybody whole with state funds, or if all taxable entities bear some of the brunt of this cost. And I think Director Henson has discussed it before, and I'll yield to her, but we don't necessarily have to do it one way or the other. And And I realize that's kind of cantankerous possibly, but Director Henson, would you like to comment?
Mr. Chairman, you're correct. The item number 7, the homeowner's tax credit, is in our current statute, and it does require funding at this moment. If it were to be implemented, the homestead exemption is not in statute at all, and so that would need to be crafted. But I do believe that, as you stated, it's possible to implement the homeowner's tax credit without the backfill. We have numerous exemptions on the book today that are not backfilled, but it would definitely be at a policy decision that the legislature would need to make.
Okay, thank you, Director Henson. Representative Gray.
Thank you, Mr. Chairman. So I want a little more clarity on what Ms. Henson just said. So this homeowner's tax credit, it is in statute. What's the structure of it? Is it $50,000 credit? And why hasn't it been triggered? Is it just because there's a line in there that says it has to be funded, or has that been the interpretation of the department? I mean, I guess what I'm saying is, do we just need to take out one clause and then this has to be implemented regardless of backfill? It's just there's not going to be, the flows aren't going to be as high. So what's the structure? And if you have the statutory reference, or if we could get it, that'd be good. Thank you.
Director Henson, you want to start with that?
Certainly. Mr. Chairman, Representative Gray. So the statute is 3913-109D Romanet I. It is designed to provide tax relief just for the principal residents. But the numbers that are in our statute, as far as the criteria and the maximum numbers, they've been in statute since 1979, and it hasn't been funded since 1986. So the numbers that are in statute relate back to prior to fair market value as a standard. What's back when we were at 25% of a 1967 replacement cost. So in order to implement this program, we definitely would need the legislature to change the values, because right now it would be homes valued under $41,052 would receive the highest amount of credit. Not many of those. Homes with a value over $61,579 in market value would receive no credit. So under the current statutory language, it really is not a workable program, but certainly those amendments could be made to the program to make it current time. I did a little bit of math just looking at the value of $1. And so if we use the value of the dollar as it was in 1980, that value would be $220,500 today, just due to inflation. So we could certainly look at that. I had a memo that I'm sure all of you have, dated May 20th, 2022, that just investigated some possibilities as far as amendments that we could make to this program.
Anybody else? So
Mr. Chairman,
I'm not sure who that is, but go ahead.
Dean Temte, LSO.
Okay.
I just wanted to mention that in the past, when this program was running, the legislature has appropriated dollars to backfill it. When it was last in place in 1986, there was an appropriation in that bill that passed.
Thank you, Dean. And I don't know, my feeling is just because the Constitution specifically uses the word exemption, the legislature can create exemptions. We might be better to just kind of take the same program, modernize it, and move it into the exemption category, just to give us a slight bit of protection from a court challenge. And then we'd have to decide whether to backfill or not. And that is going to be probably true on a lot of these programs. That'll be, and local governments are hurting for revenues too. So anything else? Shall we move on past these two? Let's go ahead.
So, Mr. Chairman, and again, one final note on that, the homeowner's tax credit. So the last time that was active was actually before the Constitution was changed, Article 15, Section 11 to the current language. So so that would also need to be thought about when we're going back into this, that's changed significantly since that time. Number 9 on the list, this was one that came out of that document that Director Henson just referenced of some of the thoughts that the Department of Revenue had brought to our last meeting. So this would be a renewable, excuse me, Mr. Chairman, a renewable energy property tax exemption. Again, this was in that same category of possible argument of violation. Would note there that there are current exemptions in statute for pollution control and equipment and snowmobiles. So again, don't know that those have been challenged. I don't believe those have been challenged, but just wanted to note that for discussion.
So I'm trying to remember how this actually got on our list. As I think about this, it's to exempt from property taxes renewable energy improvements that people would make on their homes. I'm trying to think how it provides tax relief in a general sense and meets some of our criteria. So I throw that out there, and then Director Henson, I'll yield to you.
Mr. Chairman, one of the tasks that was assigned to the administrator of the property tax division, Brian Judkins, looked at other states and other types of residential property tax relief that was available. And this just happened to be one of those, just wanting to put all of the options on the table, but there are other states that have implemented this recently.
Thank you, Director Henson. I'm actually sure it's very common among other states. So it may be good policy, and maybe good policy with respect to global warming and climate change, but does it in the category of general property tax relief, it kind of falls short.
Mr. Chairman, Pat
Sweeney.
Would we have to dive into net metering?
No, I don't think it has a. It's related to net metering in the sense that these some renewable energy productions would be that people would have at the homeowner level would be under the net metering tariffs. So there is that piece, but this would just be, your solar array on your house. Maybe it has a value of $50,000. It increases the market value of your property, assumably, and we would net that back out somehow. Director Henson.
Mr. Chairman, that's correct. Currently, county assessors value solar panels, the wind turbines that are on properties. They're not exempted. As we know, all property is taxable unless specifically exempted. So we would actually, at the assessor level, be requesting that the assessors remove that item from the tax roll and just make it exempt, just similar to the pollution control.
Right, and
Just
Director Henson, just hold on a second, Representative Sweeney. Director Henson, so that would treat the same as a solar array that's actually on and attached to your house versus a standalone wind turbine that's kind of off of your house on your property. But it kind of work the same. It all come off the top of the value of the property. Is that the way that goes, or are they taxed separately? It's just a weird question. I'm sorry.
No, that's fine. Mr. Chairman, they're all taxable and included in the value. And so it's just a matter, typically it's a cost approach that assessors use to determine what the value. Obviously, when those are present, the value of the property is more than if they're not present. And so just like a sidewalk, or a shed, all of those items. And so it would just be a matter of not listing those. I would anticipate that it would probably need to be applied across property types. I would not envision that this would just be residential. I would anticipate that that would probably be an exemption on industrial, commercial as well.
All right, thank you, Director Henson. Representative Sweeney, I didn't mean to interrupt you.
No, I was just curious, Director Hanson, how assessors treat windmills at the water tanks on ag production. Is that personal property, or is that assessed differently?
Director Henson.
Mr. Chairman, if they are owned by that ag producer, they are in fact assessed. As far as it would really depend whether it's personal property or real property. I would envision that most assessors pick them up as real property. I don't think that the ag producers typically think of that as personal property. They're thinking more of their farm machinery, those types of things. But it's definitely a taxable item in Wyoming.
Thank you, Director Henson. One more thought along this line is, I would imagine that renewable energy installations, while it's not hard and fast, by and large, people that have them are in the higher incomes categories typically. It's not hard and fast, and plenty of people are very committed to these, to renewable energy, and they don't have a lot of income. But I think you see the bigger, more valuable things on the bigger, more valuable houses. Okay, are we good? Let's keep going.
Okay, Mr. Chairman, next one, number 10, tax relief from existing income sources, similar to Alaska. Again, this came out of that same document from the last meeting. It's currently in this category just because there wasn't a lot of detail as to how this would be. I think the idea would be using some state funds to provide relief back to taxpayers, similar to how Alaska provides some of their oil and gas revenues back just as a check to their citizens. Again, a note there that depending how this is structured and how it goes, if it's not income limited, this would potentially implicate Article 16, Section 6 that prohibits donations other than for the support of the poor.
Gotcha. Any questions on this? Okay, let's keep going.
Okay, next one, Mr. Chairman. It's the idea discussed a lot at our last meeting of a use of acquisition value as a base for property taxation. Again, we put this in the category of strong argument of violation, just because depending on the last time the property changed hands, you could have different categories of properties assessed essentially at different rates. A note there that this has also been discussed as a potential constitutional amendment, which would of course then avoid those constitutional concerns.
Questions? Representative Gray.
Yeah, thank you, Chairman Case. I'm a little it's interesting. So how did you calculate this? I'm not understanding the estimated fiscal impact section. Could you go through a narrative of how that was done? Thank you.
Thank you, Representative Gray. Let's get Dean to do that if he's on the call still.
Mr. Chairman,
No, go
Dean
ahead.
Temke, LSO. You know, what I did for this estimate, we had a somewhat recent request which was similar to using acquisition value, and that is to freeze the values at a particular tax year. And what I did, this estimate is based on 2000, if we just froze the property values at 2019 property values. Of course, then property taxes would also apply to new construction at the value when that home is moved into. And then also the value would also be based on the the price of a home when it is sold. So if you go back only back to 2019, the estimated revenue decrease is $242 million in total. I would say, and this is also based on the 2019 property values, and also is taking into account how much property values have increased since that point as well. So I would also say this 242 million, if you go back farther than 2019 to try to set values at a particular year earlier than that, this fiscal impact would increase. This is one, Mr. Chairman, where if you went true acquisition value, I think the estimate would be even much higher than this estimate provided here.
So, Dean, so in essence, it's an estimate pretending like the acquisition value was 2019. We'd have to start the program somehow. Otherwise, I suppose you could say, ask people what their acquisition value was and have them show it and then back the taxes down to that. But it gets a little complicated. You had to start somewhere, I guess. So, Representative Gray, did you have any follow-up? Then we'll go to Director Henson.
Okay, you know what, I'm okay. Thank you. Appreciate it.
Okay, thanks, Representative Gray. Let's go to Director Henson.
Mr. Chairman, on this particular constitutional amendment, just a few things to consider in that those properties that sell, the first thing we'd need to do is to define that purchase price. Meaning, does purchase price, is that, since we're going to base a tax on it, I think it definitely would involve some statutory requirements as to reporting of that purchase price and what is to be included. The other thing is that the majority of the properties are not going to transfer in any given year. So really, the focus then is how do we treat those properties, and the discussion that we've heard is possibly going back to 2019. However, right now, county assessors are tracking property characteristics, appraising property annually as of January 1 of each year. So if you go back to 2019, there's no guarantee that the property even exists today as it did on January 1 of 2019. They may have finished the basement, they may have added outbuildings, and so that would have to be investigated. The other question would be, how would you treat new construction, where I'm a property owner that purchased a piece of land and then I built my home. We would need there's no deed that occurs at that time. So, what would be the reporting requirements for those folks that built on their own property? The other thing is, what about non-arm's length sales? As you know, there are many, many different types of transactions that occur. So I think the concept itself, should we change the Constitution? Obviously, that could be done. But I would really encourage a lengthy amount of time to really hammer out those details as to how we're treating properties, because if we don't, there will be litigation. And that is not how we want taxpayers spending their hard-earned money.
Thank you, Director Henson. Representative Jennings.
Yeah, so thank you, Mr. Chairman. So my question would be more to, well, either Director Henson or Mr. Temte. So if you went back and say you went to 18 before the hyper, or 17 or something like that, but did you, when building this model, did you also put in an escalator, say a 2 or 3% escalator? And I understand what you're saying, Director Henson, that you'd have to address a lot of those other issues at the same time. I mean, that was why it was kind of sad to see the study bill go away, because that would have given us a lot of these answers. But would that not affect, Mr. Temte, if we'd have gone back even at 19 and then put the 2% or 3%, it would lessen these numbers it could. And the second part of that question is the fact that you're not going to have that many cells. And so not knowing what that would be, how do you come up with these numbers?
So let's go to Dean, and then I see that Representative Gray has his hand up. We'll get him next. So Mr. Tempe.
Mr. Chairman, Representative Jennings, and actually this estimate did include how how values have increased since 2019. That was taken into account. It also took into account the rate of new construction. And also based on the sales trends of homes as well. As far as one thing I did is in looking at this model, if you move the year back, generally speaking, values have continued to increase even up to the point of 2019. So if you move the year back as far as the year you want to identify as, okay, we're going to use this year's values, the revenue decrease increases.
Gotcha. Is that good enough? I see my screen's blowing up with people with their hands raised. So I think I saw Representative Gray have his hand up.
My question got answered again. Sorry. I'm good.
Okay, sorry. Then let's go to Assessor Davis and then Director Henson. Assessor? Well, let's go to you, Director Henson, and then we'll come back.
Mr. Chairman, one other item that I wanted to point out is, would this be use of acquisition value for only residential property? Would we continue to value commercial property, industrial property, minerals at fair market value, or agricultural value? We've already got it at productivity in our Constitution, but definitely that would be another. We're looking at changing the Constitution. So I think all of those things and how broad would definitely impact the fiscal impact and the administration. It should be noted that we provide the computer-assisted mass appraisal system for all 23 county assessors to arrive at fair market value at a cost of about $1 million a year. Should we go to an acquisition value, there will be substantial changes to that CAMA system. And depending on those policy details, what would be required of the county assessors.
Right. So I think our thinking has just been on residential property relief. I would recommend that we stick to residential property relief as if we were to go down this path. And it is very open-ended. I certainly agree with you there. And much more to be figured out. Let's get Assessor Huxtable.
Good morning, Chairman Case. I'm not sure. Are we there?
Yes, you're here.
Okay. I'm not sure what my colleague wanted to talk about, but one of the comments that I wanted to bring up about Director Henson mentioned briefly agricultural. And while the land is at production value, remember that the houses and structures are at residential. And I can guarantee you when those sales come in, no matter how we have them reported, those houses are not broke out. That property sold in one big value. So how you would identify the value of the residence to keep it at market value, which is what we are currently out of that whole egg, is something to be discussed. So that's something that needs to be added to the whole list of things to identify that's already been mentioned.
Thank you, Assessor Huxtable. Representative Sweeney.
So I agree rarely with Representative Jennings, but I too really wish we could have moved that acquisition value study forward. And I just in the context of this conversation gave me a lot more information to think about. But I too agree with Chairman Case that I think we were looking at residential. Dixie just brought up a very good point of another thing that we need to take into consideration. But I'm not willing to quite give up on acquisition value that easy, nor should the committee. But it is painfully true that we need a study bill again in this next session, and would encourage Representative Jennings and the committee to possibly put that forward.
Yes, thank you very much. Representative Gray.
Thank you, Mr. Chairman. Got a couple more. Sorry, I'm passionate about this, so I keep getting more questions. So is the estimate just for residential? I'm a little confused on that. And does it include inflationary, some sort of estimate? Because a lot of the proposals have had that in there, that you would go back to 2019 and then have some sort of inflationary kicker, whatever the percentage would be.
Let's address that right. As I understood Dean's testimony was that this is sort of a snapshot year, and I don't think that he included raising by 2%. For example, the tax relief granted in 2026, there would be less by the 2% granted in 2027. So that was not included. It's not going to be a huge number, but I get your point on that, Representative Gregg. We had excavators in there. Oh, and now Dean's going to correct me, which is good. I need correction. So let's yield to Dean, and then let's let Representative Gray hasn't even finished his question yet, so we got to get back to him. Dean?
Mr. Chairman, Representative Gray, just to point out, actually, this estimate is only based on residential property. It did not include an estimate for commercial or industrial property. And it also actually did incorporate the actual growth from 19 to 21, the projected growth to 22, and then the forecasted growth of non-mineral property in the January 2022 Craig forecast. So yes, growth is included within the estimate, and it's only based on residential property.
Okay, we good?
Thank you.
So everybody, just in terms of this concept, I understand Representative Sweeney is passionate about having a study. I'd also point out that all of these would require a constitutional amendment. You'd have to have the amendment prepared as well in order to try to get on track. We could do it in the budget session year following, but the idea is it needs to be to get relief to people, and it has to be on the general election ballot in 2024. And we could do it in either session, but that also has to be handled to make these work. So anything else on the acquisition value issue? It's a huge issue. Okay, let's keep going.
Next one, Mr. Chairman, is a multi-year average assessment. This was kind of based on what they do in Maryland. They have a 3-year property tax system. We described it as a rolling average, and that's kind of what the estimate is based on. It's actually somewhat more complicated than that on how they implement it. We did think this one, because of not having the assessment at the full value, kind of by definition, it would be a 3-year rolling value. And also just how you treat property where construction happens and so forth, create likelihood of creating different subclasses and how those are assessed. We put it in this category of a strong argument of violation. And I defer to Dean for the estimate.
Back to you, Dean.
Thank you, Mr. Chairman. as Josh had mentioned, this is based on if what the estimate is based on is if residential values were based on a 3-year rolling average rather than the market value in the particular year. It was based upon the actual total assessed values of residential properties over a period of time. Specifically, and it's also based on the projected growth rate projected in the January 2022 Craig forecast. This estimate, it says the estimate is for FY25. However, if it is decided by the working group and the committee that a constitutional amendment would need to accompany this concept as well, the first fiscal year it could be in effect probably would have to move back a year. And again, this is based on the forecasted growth of non-mineral property in the Craig forecast, with a total decrease in property taxes of $19.1 million per year in FY25. And again, if a constitutional amendment is seen as having to pass before this could take effect, the first year it could be in effect likely is for fiscal year 2026. The estimate for fiscal year 2026 ends up pretty close to the fiscal year 2025 estimate. It's right around that $19 million in total. But again, these are based on the growth of residential property in aggregate.
Any questions for Dean or Josh? Any questions? All right, let's go to the last one.
Sure thing, Mr. Chairman. So the last one we have is to implement a percentage cap on property tax increases. This one's been discussed to a fair amount over the recent years. Again, we would put this in the category of a stronger argument of violation, just because of, again, affecting the amount that can be assessed, and then also for the potential of creating subclasses. For example, if there's properties that are increasing by less than 3%, they would still be valued at their full value, where then anything else increasing above the 3% or 5% would have a depressed value. And turn it over to Dean for the estimate.
Go ahead, Dean.
Thank you, Mr. Chairman. Thank you, Josh. I would start off by saying, Josh is correct. We have seen bills during the past few sessions to try to do this, and I have sent this bill to the Department of Revenue, and their response has been the fiscal impact is indeterminable because it depends on future market value increases of individual properties. So I would say what I did try to do is I tried to come up with the fiscal impact if this would have been in place over a period of time and only based on the percentage growth of residential property in its aggregate. So it's not, I didn't have data regarding specific individual properties. It's based on what the growth in residential property has been in aggregate. And I ran two different calculations, one based on a 3% cap and the other one based on a 5% cap. And you can see that the fiscal impact of this particular item grows over time. In whatever years that the market value of residential properties are increasing by more than the 3% or the 5%, that is going to increase the fiscal impact of this particular concept. And as I mentioned, looking at a cumulative impact from 1993 to 2021, that cumulative impact in its aggregate would have been $4.67 billion. And then based on a 5% cap, that impact would have been $3.88 billion. And again, that is just based on the percent increases in residential property in their aggregate over that time period.
So Dean, in your model, you didn't think about the fact that, at some level, these properties will be sold. And at that time, there'll be a new acquisition value, but there would be some kind of a distribution of sales per year. And agreed, it's a very, very long-term process, but that would provide a cap on the cap, so to speak, the negative impacts. The cohorts of sold properties over time. Like if every property sold on average 3 years, we wouldn't have a very big problem. If it's 25 years, it's different.
Mr. Chairman Case, this estimate does not take into account the concept of properties being sold in their new acquisition. It is just purely based on how the assessed value of residential property has grown over that time period.
Okay, that's great. Thank you. I'm trying to get the order here, and I see on my screen, I'm going to go Sweeney, Huxtable, Devis. So let's go Sweeney first.
Thank you, Mr. Chairman. So I've had some different thoughts over the last few months. I've been a big advocate on a cap, but in looking at it more, I think I hope the committee will look and listen at a constitutional amendment first on possibly moving residential out of the other category and not just go directly after a cap. And I have other thoughts why to just do that, but and I do agree after looking more at this that the cap most likely will take a constitutional amendment. I agree with the research. So, but I'll leave it at that and look forward to Dixie tearing me apart. So
She won't do that. Thank you, Representative Sweeney. Assessor Huxtable, welcome.
Thank you, and thank you, Chairman. And no, Representative Sweeney, I would definitely not do that. What I do want to comment is that some of the same issues that were brought up on the acquisition hold true with the cap. Making sure you have definitions as to what triggers the cap or untriggers the cap. As was previously mentioned, sales were not mentioned in this, that when it sells, that cap automatically comes off and you go to acquisition. That's certainly something to be included in the discussion. But also, what triggers the cap to come off? We do not field inspect every property every year. We get to the properties once every 6 years. So when you're talking about both this and the acquisition, if we pick up something that happened, we go field check a property this year, but the change actually happened 3 years ago. How does that play into all of this with the caps on a year-to-year basis, or even back to the acquisition? Making sure that that's all defined in this if you go this route, and presuming the Constitution gets amended to take care of this, these are all just things for us to think about. And of course, the ag comes into play. There are many years where that production value goes up, and as long as the ag is part of the all other, that's got to play into this. That's based on other statistics outside of the assessor's handbook. And so there's just a lot of things to still consider in this percentage cap. And while we are not, as a group, opposed to any cap, we just need to have those answers or at least definitions or guidelines in place before we go that route, so we don't end up with the litigation that Director Hinson was talking about.
Thank you very much, Assessor Huxtable. I think those are good points. Assessor Davis.
Yeah, I just have a couple of points. I think the research has been done very well. I think the group is winning this with the right intent. The one thing that I want to caution you is, reducing property taxes and then creating another tax to fill the hole doesn't really help anybody. And it wasn't that long ago that the legislature was looking at increasing the assessment rate to actually make up for a shortfall. So as this is being crafted, and this is just my opinion as the Sweetwater County assessor, I think, we can look at it in a window, a very small window, and say, well, we want to just help people when values are going up. But if we do this correctly, we can also work into this, what happens when values go down. And that's something that could happen again. I mean, and even in the research that's been done here, nobody talks about value decreases. Is the decrease capped at 3%? Is the decrease capped at 5%? Are the decreases just a free fall? So, and again, what Assessor Huxtable said, and she's much better at this than I am, the assessors just need direction. We're here to help. We will do exactly what you put in the law for us to do, but we're just going to need help with direction. And as you can tell, we have a lot of questions that need answered. But those are my comments on what we've done today. And again, very good, very well done.
Thank you very much, Director or Assessor Davis. Representative Gray.
Yeah, I want to make a couple, just one comment on Senator Case's assumption on number 13. I think that was done under the assumption that the current system would remain, that it would be a cap with the current system. So your comment on it resetting with a new acquisition, I'm not, you can combine the two, but I think that was the assumption that he made, and you can correct me if I'm wrong. The one other thing is, if Miss Barlow, I know she's been trying to raise her hand and apparently is having a hard time. If she's pretty passionate on the acquisition value, so if we could give her a chance to ask a couple questions, I'd appreciate it. She's had a
We're going to get general public comment, and so right now we've got elected officials and the director of the Department of Revenue. And then we're going to broaden this to general public comment. Ms. Barlow will absolutely get her chance. Representative Gray, were you looking for a comment from Dean on that, on your comment?
If he wants to, I that's my interpretation of it, but maybe you can correct me. Yeah.
Fair enough. That's good. Dean, are you still around?
Mr. Chairman, yes, I am. Chairman Case, Representative Gray. Again, the concept of acquisition or sales was not included in this particular estimate.
Mm-hmm.
And again, it was just based on the historic growth in residential property, and also to address one of the other comments from Mr. Davis. The cap did not work, or the impact of a negative cap, if you will, was not incorporated into the estimate either. In other words, the drops were not limited by the 3% or the 5% in the calculation. It's just that in those years that went down, they went down by the actual amount and was not capped at a particular decrease.
Okay, thank you, Dean. I see Director Henson has her hand up. Let's go to you, Director.
Mr. Chairman, just some history. When we went to fair market value as a system and basis for taxation in 1990, there was a provision that the values on property, all property, could not increase over 25% in a year up through 1992. So we had 2 years where assessors were looking at these caps. However, there was a provision in that if the property characteristics changed, that cap was not applicable.
Mm-hmm.
So definitely that was just a short-term 2-year time period that assessors were dealing with this as we moved to fair market value. But it's just something to consider should this move forward.
That's a good point. So if you made an improvement, then it started over again.
Mr. Chairman, then the cap did not, was not applicable. And the assessors within the CAMA system would just need to indicate, you know, I've picked up a finished basement, I've picked up a new deck. We just need to identify if those property characteristics have changed in any way, the cap's not applicable.
New bird,
It would be at fair market value.
a new bird feeder, would that trigger it? Depends on your assessor, I think. Representative Sweeney, that's just a joke, you guys. Representative Sweeney.
Thank you, Mr. Chairman. So, and I haven't put a new bird feeder up, thank you. So, so that's interesting, Director Hanson. So, was that statutory? Because obviously it wasn't constitutional, a constitutional amendment. And if it worked at that point in time, is that a statutory type thing the legislature could look at in this next session to avoid a constitutional?
Go ahead. Director Henson, if you can.
Representative Sweeney, it was statutory. It was part of the migration to fair market value, keeping in mind that assessed values previously were that 25% of a 1967 replacement cost that had nothing to do with fair market value. So what happened was county assessors in 1990 had to value everything at fair market value, then compare it to that old system and see where that fell. And so I don't know if it was held constitutional because it was the implementation piece of a new constitutional requirement that I believe LSO could definitely provide that research.
It could be that nobody really took on that piece because it was transitional. And anybody in LSO have any idea? Anyway, we can look more into that, but that kind of is a good point. But since it was transitional, I suspect it didn't get tested in the courts. I hear something, but so just by way of committee, we've gone through the list. There certainly may be things that aren't on the list that has come to mind, and we can discuss those. But what I would propose to do is that we open it up for public comment and get comments from the public now. And as I understand it, Ms. Cindy Barlow is wishing to make public comment. So absent objection, I thought we'd go to public comment at this time. And then we'll come back for committee discussion and direction. So,
Senator Case.
Yes, go ahead. Representative.
Just on order here, also the memo that we received from the county assessors after they had met, how did you want to try to go through those bullet points also?
Well, that's a very good point. Maybe would you like to let the assessors lead us through it? Assessor Davis, is that something you'd want to do, or Assessor Huxtable?
Did the whole committee get that?
I'm not sure. Josh, you know what we're talking about?
Yes, Mr. Chairman, I believe that was sent by some of the assessors. I think the full committee got it. Let me check my email real quick and I'll make sure.
Was it a document available for the public?
I don't think we've made that available to the public. We can certainly see about adding that. I don't know if we'll be able to do it in the midst of this meeting.
I understand that. And then perhaps if the assessors are willing, would you guys like to go through the document so that the public has a flavor? And Assessor Huxtable, I see you. Let's go.
Josh, just so folks don't have to look for that again, if you find that, if you could send that back out, would that be okay, Chairman Case?
I'm fine with that. We're kind of asking a lot of our staff when they're trying to do other things. Yeah. If that's possible, fine. If not, we'll get it, because And we will put it on the website with the meeting materials, if that's acceptable to the assessors. And so Ms. Huxtable, we're back to you.
Okay, sure. I want to make sure I know what we're talking, which document we're talking about. That property tax reform discussion that we put together that I think our president Dave sent out, is that the document you're referring to, Representative Sweeney?
I believe so.
It's a 2-page document that lists,
Yes.
okay.
Yeah, and so just by way of noting, you may consider that some kind of a private document, or you can decide whether you want it to be released or not. That's up to you.
I'll defer that to my president, Dave Zahn.
Okay, fair enough. Because I know that you had some very candid discussions, and it wasn't a public meeting.
Mr. Chairman, speaking on behalf of the Assessors Association, I don't think there's anything in here that we would consider private or non-public or anything like that. So we would be willing to share that. These were just our thoughts on the meeting and the discussion we had, and then our thoughts after we came back together as a group. And I'm okay with these being shared.
Okay, with that being said, that's good. And still back to Ms. Huxtable to kind of give us the gist of it. That's all right.
You bet. So we met at our summer meeting and we invited the legislature, the DOR, the State Board of Equalization to participate in kind of a round topic discussion, round panel, a round table group, with property tax relief being the focus and the only focus. That's all we were talking about. Just as a point, we had Senator Case, Representative Sweeney, Representative Henderson. I think that was the legislators that were able to appear. Maybe somebody came in later. That's what we had on our list. Department of Revenue Director Henson, Property Tax Administrator Judkins, and then we had Chairperson Jane Mockler from the Board of Equalization, along with our assessors, and we were participating in a Zoom type meeting. So we were first discussion and first focus was on who are we trying to help? Because once we got to where we knew who we were trying to help, we as a group, assessors, could maybe help focus on concerns, questions, items, on a couple different options. But first we felt like we needed to know who we were trying to help. And we really did feel like the renters needed some assistance as well. I think that was brought up by Representative Yin. If the value of the house goes up, even if it's not owner occupied, if it's rent occupied, it's causing some of those renters to be kicked out and having difficulties. So we wanted to try to get something in place if we could that would help with that scenario. We talked about the property tax refund program. Thought that was probably the quickest way to help taxpayers in need. Some small tweaks could be used to help those that we can identify. It would require some additional funding. I think Director Henson's already brought that up, that based on what happened this year. We did talk a little bit about the fact that there's county option for that, thanks to the legislature last year that approved that county option. And there are, to my knowledge, 3 counties that have opted for that. I know my county is one of them that budgeted for a county property tax refund program. They're still in the rewriting or the procedural stages of that, but hopefully for the 22 taxes, there will be some additional relief, at least for Commerce County. And we really like that as an association to leave some of that control into the county's hands for those counties that could afford it and were in the position to do that. The homestead exemption was discussed. We thought that it could be updated in the next session to help some measure of relief, and we thought that was a good way to go. Certainly would need to be tweaked because the counties need to be somewhat specific. Certainly the relief for a Teton resident is different than a resident from Niobrara County. And so those discussions were held and brought up, and maybe even the possibility of making that program a county optional with legislative discussion that, as you know, the property tax refund is county optional. Maybe the homestead, if it was to be approved, not only would there be a state program, but maybe an optional county that could be tweaked to benefit specific counties was an option that we put out there. That would certainly like to be investigated. Property tax deferral, that is just not popular. It is a program out there, and we hear it all the time. I don't want to lien on my property. Irregardless of how you try to explain it or how you lay it out, taxpayers just don't want that lien on their property. So it's just not a popular option. Certainly something that can be looked at, but it's not a big popular thing. One thing that we've not talked about at all, but we did in our meeting, was monthly tax payments. If there could be, whether it takes legislative action or rules or whatever, to allow that option for taxpayers to pay their bill monthly instead of in 2 large payments, maybe some relief to these people that are on fixed incomes, so that they have a smaller monthly bill instead of 2 large bills. Like to have that investigated possibly. We did talk about acquisition value. Most of what we talked about has already been brought up, would have to be carefully crafted. As my president commented, we don't want to create another tax because of something that goes awry in this. So acquisition certainly is not off the table, but there's a lot of questions that would need to be addressed to be able to allow us to administer it. Valuation caps, again, a lot of discussion on that. We have colleagues that have done a lot of research on it. Again, you got to look at the language pretty carefully. You got to look at some definitions, some triggers. The number itself, what that magic number is, 3, 5, 15, 20%, whatever you're going to pick needs to be looked at carefully. Assessment rates were brought up. This was a topic that came from the State Board of Equalization. Looking at those assessment rates rather than trying to adjust a market value seemed to be a topic that they felt was worthy of discussion. We brought up the topic of full disclosure. In some of this, if there's full disclosure out there so everybody knows what stuff is selling for, that's a huge part of the piece, especially if you're going to go to acquisition cost and on all that. How is full disclosure going to fall into this? Which we certainly are not a full disclosure state, which we all know. So we did have a lot of good topics. We did feel like that we are ready to offer comments, and not that we have an opinion on any one of these policies other than the administration of them. We have to be able to administer them. The homestead, I understand, and Director Hinson mentioned that would come out of the assessor's office. Historically, they administer that. And none of us were very excited about looking at anybody's tax return. So income-based in any of these programs is not something that any local assessor wants to be a part of, where they're making a determination on somebody's tax return. Taxing entities is something that we talked a little bit about. Residential property owned by non-residential entity, an LLC, a trust, a corporation, how those transactions affect what we're doing. We touched briefly on them. That's part of the research to look at. If a house, a residence is in a corporation or an LLC, and that LLC or corporation sells, we may not know that because it happens through a corporation, a merger, not through a deed. They own all the property that corporation owned. How does that play into acquisition? How does that play into caps? How does that play into all these things? We did put together a matrix, and I think that was part of the document that was sent out, basically sort of a matrix similar to what the LSO did, but it was, we called it long-term property tax relief, and then short-term, those things that you could do in the short term, the things about the assessment ratio that can be done fairly quickly. Some of these programs that are already in statute, tweaking the language on them, versus the long term that we've already talked about, where you have acquisition or constitutional issues. So that's the document. I'm presuming that's the one that Representative Sweeney was referring to. Happy to answer any questions. Dave is on that can also address any concerns or questions or anything that I missed. So stand for any questions.
Thank you, and I think you did a great job, Assessor Huxtable. Appreciate it. Assessor Davis, did you want to add anything?
Well, as always, Assessor Huxtable covered it very, very well.
She's good. Okay, Representative Sweeney.
Thank you, Chairman Case. Just one question on number one. I don't remember seeing the matrix, Dave or Dixie, but I may have missed it. On in particular, the property tax deferral. in your comments, Dixie, and I get it. I wouldn't want to lean on my property either, but I would rather have a lien versus go into, if I haven't paid my property taxes, then I go into the auction system. That's a 5-year window where I've got to get caught up. But if I lived in Teton County in particular and had the need, I would much rather have a deferral than do a reverse mortgage or go into the tax sale system. I'd rather be certain on the lien and not lose my home.
Representative Sweeney, Mr. Chairman, if I could, and
Yes, go
Representative,
ahead, Assessor Davis.
Representative Yin may be able to answer this too. I'm not sure what the application process for the deferral program is either. And I think that might be something that's making people hesitant. I mean, if it's a public meeting where you have to fill out a public form and you're publicly asking for help to pay your property taxes, I think that's another detriment to the system, just simply because it's all out in the open and your neighbors now know you're having trouble paying your property taxes. I think that's another issue with the deferral program. And maybe that's something that can be changed as well, where it doesn't necessarily have to be public, and maybe we would get more people participating. But I think that's another issue with the deferral program. Thank you.
So this has been part of my thinking, everybody, and I asked for a bill draft in this area to create an authority, state authority that could actually issue bonds, and through private banks, people can take out loans. It would be like a multi-year lines of credit to be able to handle the increase in property taxes. And then it would be the authority or the local bank that would actually have a lien. And the assessor wouldn't know anything about it. As far as the assessor is concerned, the property tax would be paid, and the public listing would be that the property tax is paid. It would keep people from having to go to the government for the relief. They'd actually be working with their local banks under a program that where the bonds are issued by some an authority that we create, a property tax relief authority. I'm going to share that draft. That draft of that bill is in review, and I will share it with the committee and everybody else when it comes out of LSO review. But that's my thinking about the stigma attached to this and trying to reduce that. Because I just come back to overwhelmingly the security is there. The reason your taxes went up $1 is because the value of your home went up $100. So anyway, I'm sorry, I didn't mean to take that time up, but I do think that Assessor Davis is on to something. You guys, any more questions about the assessor's memo? Anything else? If not, I was thinking to open this whole thing up for public comment, and then after public comment, we'll come back to the committee for some discussion and kind of direction to get us to the committee meeting in 2 weeks. So, okay, let's go to public comment. Emily, are you wrangling that?
Mr. Chairman, we have Cindy Barlow.
Great. Bring her in.
Good morning, Chairman and committee.
Good morning, Ms. Barlow.
In review of the document and hearing the testimony today, and of course, you guys all know where I stand and what I think about some of this. As we look, and I'll just go through this quickly. As we look at the decrease in the number of mills being assessed, I mean, there's a whole issue around the mills that needs to be addressed of the mapping and how people are actually able to assess those mills, where when you look at how the mills are going out in and amongst the counties and the people are being taxed, and the oversight to those committees, then the slush funds that are sitting there. There's a lot of issues right behind the mill levy that truly needs to be addressed. When you look at reducing the tax rate of 9.5%, you know you're going to have to go down the road if you take that on of industry coming back and saying, if you're going to reduce residential, 3%, we want to see our reduction as well.
And
So
just,
the
Ms.
fiscal,
Barlow, let's, if we reduce the assessment ratio, it also covers commercial property and others, right?
we have talked today that this is strictly about residential. So I'm just kind of bringing up the issues that I'm seeing as you guys have discussed this. So I don't have that answer. That's up to you guys to decide, right?
Well, I just, if we reduce the assessment ratio under the existing constitutional language, I think we're caught reducing all of their property as well as residential property. And that's, whereas if we were to do a constitutional amendment, yes, we could potentially reduce the assessment ratio just on residential.
Well, again, isn't that what we're talking here? That's what the numbers are based off of.
Right. I think the numbers in the table were based on all of their property.
Right. Okay. One thing, the one thing I did like was the proposal underneath the veterans. I think that we need to look at that and consider that. When we look at number 5, the property tax deferral, and the conversations that I've heard of going around that, I would actively be on the ground talking about that to go against that. There's nobody, if you look at mortgages and how your escrow's handled and monthly payments going out, I really see a lot of issues going on there for people who have their taxes escrowed with their mortgage. And I question the Constitution on that. If we're questioning the Constitution on acquisition value, then we darn sure should be questioning the constitutional ability to put a lien on somebody's home with a banking institution. So I think that needs to be looked at and considered. I know that Chairman Case, you had brought that up as well at one point, that it might have to be addressed. When we look at the overall acquisition value, as you all know, that I've been talking across the state to different groups about acquisition value and fixing the property tax issue in the state of Wyoming. And I hope that as a group, you guys will seriously consider the bill that was out there last year to have a study. If we would have had a study last year, we would have been much further down the road this year of where we could actually be. And I think that that's something that for the taxpayer to be able to have a true number to go by and a true approach. The numbers that I see here today, if you look at them from 26, 27, and 28, they simply just go up 9.5%. So, and the fact that we went back to 2019, and then looking forward after all this inflation and how we've seen values explode in some counties. Look at what you've gone through the state this year. And everybody in their campaign promises were talking about having a cap. And that was one of their selling points for running for office. So as we go forward, I hope you guys as a committee would consider a study. It's something that the constituents and the people of the state of Wyoming definitely have been telling me that they want to see. And if they're not telling you guys, it's just simply that maybe they feel a little bit intimidated to be able to bring up the subject matter. So I hope that you will consider that. When we talk about the strong argument of violation, I guess I want to know what that is. Are we violating the Constitution of Wyoming? Because, so if we're talking, Mr. Yen, about equality and uniformity, I can tell you some of the things that I've seen around the state, we lack equality. We lack uniformity. So there's already an argument for strong violation to be discussed. So as we go forward, I hope that we just are open-minded about listening to the people and trying to do an unbiased outside study that won't just give us reasons to not do something. And let's find reasons to find an answer. I really believe our system is broken. And I believe that our assessors across the state are doing their absolute best job with what they've been given. But I think that we can do better. And I think with where we're sitting, we're adding a Band-Aid to something that's bleeding. So I hope that you'll take these considerations into mind, and I stand for any questions.
Anybody have any questions for Ms. Barlow? Any comments, discussion for Ms. Barlow? I'm not seeing anybody. Anybody else? Okay, Emily, do we have anybody else who would like to testify?
Yes, Mr. Chairman, we have Jeremiah.
Hold on. I just saw Representative Gray's hand.
Yeah, sorry, I was a little late there. Appreciate the.
Okay, let's go back to you.
Thank you. So Ms. Barlow, I just want to make sure, you've worked on this a lot, sort of your suggestions on if you were in our shoes, how you would proceed. I understand the acquisition study bill. Are there any other bill drafts that you think we should proceed with in the Joint Revenue Committee in the short run? Thank you.
Thank you, Representative Gray. Ms. Barlow?
Mr. Chairman and Representative Gray, I really liked what Dixie Huxtable brought up about, being able to share sales, that we're a non-disclosure state. There really shouldn't be any secrets if we're talking that we're so transparent. So we should and I know that we've talked about that a lot, but I think that it's something that merits further discussion and to be an open disclosure state. I also think that we need to look at, and I really commend Jane Mockler. She has 3 white papers out there, and the one I really like, she's trying to encourage you guys, and I watched her testimony in your April meeting, to empower your county commission, maybe give them some training to be able to handle the appeals, or maybe we need to take, being a board of equalization away from the commission and find something else to a non-biased outside of the budgetary system that has appraisal background. And even though we hear all the time that fee appraisal is different than mass appraisal, they take the same classes. They get certified with the same standards with IAAO. IAAO is a lot of the same appraisal classes that your fee appraisers actually take. So let's rely on the people who have to know the market and maybe take some of this pressure off of the commission. It's a hard spot for them to sit in. And frankly, you guys, there's a conflict of interest. When your county attorney is 9 times out of 10 covering the commission, but then later on is covering the assessor, and then the commission is sitting out there with the hearing officer, there's so much confusion going on in that process that it's turned into be a very legal approach to proving your property taxes are wrong. So if we can simplify the appeal process, that would be fabulous. I know that's not easy, but it's something that we need to be considering, because I have personally watched situations where taxpayers were bullied by the county attorneys, and it's time for it to be an even playing field. Everything is against the taxpayer. The assessor has the data. They should have the data.
So let's remember that this working group is not about the appeals. It's not a working group on the appeals process. It's important, and that's in the main committee. But this particular working group is really about the means of providing relief. So thank you very much. Representative Sweeney, do you have a question for Ms. Barlow?
So on that, not on the letter, but on any other program, or not really, but on the constitutional amendment, on, say, trying to take residential out of the other, which I think is part of our discussion. Did you have other thoughts on that? First off, and then I'd like to visit very shortly on CAP.
Ms. Barlow?
So I'm not sure I understand your first question. Do you mind repeating that?
Go ahead, Representative Sweeney.
On a constitutional amendment, My thought is taking out of the other category, making a separate category through a constitutional amendment for residential specifically. So leaving everything else in the other, which would be commercial, ag, everything else that's in other, but moving residential into its own area with a constitutional amendment, and then the legislature within that 4% point system can adjust the residential.
So in other words, then you're saying they would effectively change the tax rate?
Back to you, Ms. Bowman.
Through Mr. Chairman, through the constitutional amendment, then the legislature would be able to adjust the tax rate within that 4%.
Let's go now to Ms. Barlow.
Senator Case, Representative Sweeney, I think that it would ultimately not make it because you'd be creating a special class.
I think, Ms. Barlow, what we're talking about changing the Constitution to allow exactly that.
Well, I mean, if we could get that, that's one thing. But again, you're still at fair market value. And I think what we're trying to fix is a lot easier through acquisition than it is through trying to change it in that direction.
Representative Sweeney, did you have follow-up?
That's good. Thank you.
Thank you. Anybody else for Ms. Barlow? Anybody else for Ms. Barlow? Thank you, Ms. Barlow. Emily, did we have any other public comment?
Mr. Chairman, we have Jeremiah Riemann.
Excellent. Let him in.
Thanks, Mr. Chairman, members of the committee. I'm Jeremiah Riemann here on behalf of the County Commissioners Association. Appreciate your attention to this topic. It is certainly one that commissioners are also concerned about and contemplating on a number of different levels. That includes reducing mills. We've had a couple of counties that have in fact reduced mills, but remember, they only control their own mills. So that does nothing relative to the larger portion of this. There are also counties, as Ms. Huxtable and others have mentioned, that are utilizing the optional programs available to them. One of our priorities this fall and as well as summer has been to educate counties around what options are available to them, including the deferral program and the exemption or credit programs that are available. We also are working with the State Board of Equalization for our fall meeting to ensure that there is some communication between the county board as well as the state board and some training in that. Alongside you, we are trying to analyze the options that are before you and potential other considerations. We haven't come to any conclusions around that, but are also trying to understand what the implications of the particular options are so that we can inform commissioners and you. I appreciate that a number of the things that I intended to mention today have been discussed. We do believe we need to evaluate whether there is a possibility for monthly payments in the system. Certainly a conversation that needs to happen with county treasurers and others who would have to implement that, but something to evaluate further. There are also, I think an important part of this conversation is not to think about the models that we've implemented before in their traditional sense. There are other models that are out there, and that's one thing we're trying to dig into. So for example, there are other models for deferral system other than what we have provided here. One of those could possibly be, again, not advocating, but trying to ensure that we look at everything that's possible, but reduce that offset ratio or that assessment ratio on the property, perhaps to the 7.5% that's been discussed. And rather than a deferral system as is in 39-13-109, you could look at instituting a real estate transfer tax, whereas you make that choice later to sell your property. That's where there is some offset that might exist. Just thinking outside of the box. And certainly appreciate that Representative Sweeney and others have looked at or are discussing moving residential into its own category outside of the other, so that we could reduce that ratio and evaluate its potential impacts. I did want to say one other thing. It is important as we go through this conversation that we not forget ultimately how some of these systems might impact counties differently. And I would just point to the tax credit conversation that happened earlier. There was some suggestion that maybe we don't backfill. We just implement that program. And I appreciate that. But I would say that that potentially has the ability to harm our hardship counties in particular, much more than it might other counties, based only on the probability that the value of those homes is likely less than it is in some jurisdictions. So quickly, I heard Director Henson mention the possibility of $220,000 based on the increase in the value of the dollar. Just as an example, the median home price in Niobrara County is $174,000. In Goshen County, $212,000. So both of those would fall under that $220,000-ish cap that I heard there. So again, I just think we have to be careful here, but we're certainly partners in this effort, and we'll endeavor to bring positive information forward so that that can be considered as part of this. And with that, Mr. Chairman, I would stand for any questions.
Thank you very much, Mr. Riemann. Questions for Mr. Riemann? Any questions from the committee? And Mr. Riemann, are your comments kind of based on, sometimes you give, you haven't talked to the entire commissioners in your organization. So where are we at on that? You're speaking for them, I know, but maybe how much thinking have they done about this?
Mr. Chairman, just like your membership, I have commissioners that are in different camps around these concepts. But we are having a meeting later this month where we will dive into this. As I mentioned, we're going to be talking about these concepts. We have some presenters coming in for that conversation. We're having the discussion with the State Board of Equalization. We'll do that as a full membership, and then we're going to dig in with our committee to see if we can hone in on the particular elements that we might be supportive. But it'll also depend on what these structures look like so that we can better understand those dollar implications at the end of the day for all of our communities.
It's fair enough. Thank you. We'll look forward to that. Anybody else for Mr. Riemann? Anybody else? Is there anybody else who would like to testify? Public comment?
Mr. Chairman, there is no one with their hand raised right now.
Okay. Ms. Barlow, you try to get another bite at the apple?
Absolutely, Senator Case.
Okay, we'll give you one more time.
Great, thank you, Senator Case, committee. The only thing I would add to the comments that were just put out there, back again on the monthly payments, you're going to have a revision of your treasury software as well to be able to handle those monthly payments. So you're going to have a big cost there. I remember when industry wanted to do that with their payments, and that was a big deal. So something to consider.
Yes, thank you very much for that. Okay, committee. I think if we're just kind of following our agenda, we're back to the committee for discussion. And so I would include the other elected officials in the Department of Revenue. And what's your pleasure moving forward? So to kind of think about this, we have 2 more revenue committee meetings. Both of them are 2-day meetings. The next one is in a couple weeks. It'll be 14th and 15th. It's scheduled for Casper at the new Casper Center. So it'd be nice to begin to work on these proposals. And then remember, we'll have a subsequent meeting, probably in Cheyenne and probably, in the November, December timeframe in anticipation of the session. As far as a lot of these proposals have already been drafted in different ways. And Josh, I don't mean to overly speak for staff. So a lot of these drafts are pretty available and could be available to discuss at either one of the meetings. Is that correct? Josh, I'm asking you.
Yeah, Mr. Chairman, depending which ones they are, I do have at least some drafts of most of these ideas in some type of form. It would depend. Some might need additional direction or specifics depending which one it is. But certainly could have some available at this next meeting if that was the direction, or however you guys want to do it. But I do have some drafts of some of these ideas.
Thank you. Let's go to Representative Sweeney, who had his hand up first, and then Representative Yen.
So basically my question is, do you feel we should have some recommendations to the committee out of our meeting here today, or take all of this forward again? Or
my preference is that we start to move towards some decisions. So, we don't have standing to vote up and down bills, so to speak, but we certainly can make recommendations as what's worth pursuing. And that would guide us. It certainly guide me in what we take up in 2 weeks. So I think, that's the purpose of this committee, is to try to narrow these down and get to where something we think is tractable. Representative Yen.
Mr. Chairman, thank you. So just to state my preferences, I think the fastest thing that we could do that would target the most help would be amending the property tax deferral program and enlarging who could actually be eligible for it. I think that would be really easy statutorily. Whether or not it is easy in the legislature, I think we would see, but I think it's something that I would like to see move forward. And then the second thing would probably be the constitutional amendment to split out residential homes from the all other property as a constitutional amendment. So I would actually like to see both of those move forward, where the constitutional amendment would be something that we could work on for more long-term, while the property tax homeowners refund program, we could work on for immediate relief as a 2-pronged approach.
So Representative Yen, I think you confused me at the very end, but the deferral program, expansion of the deferral program.
Sorry.
That's the one that people seem to be hesitant to use, and absent finding out why they don't like that program. And it may be a combination of counties don't like it, but there's that piece. So let's talk about that first, then I want to ask you about the residential constitutional amendment.
Mr. Chairman, sorry if I misspoke. I think my preference is towards the refund program, not the deferral program. However, I'd be willing to work on both the refund program and the deferral program. I think those are also 2 things that we could work in tandem.
So yes, the refund program looks like that's pretty easy to implement. We may find that it's not as targeted as we want, but that's pretty easy. Can I ask about the constitutional amendment to make residential a separate class? As I think about that, it seems like it could be very, very broad powers granted back to the legislature, or very narrow powers granted back. And let me just think out loud with you. There's all these issues about whether if the legislature, say the Constitution said, basically, when it comes to residential property tax, the legislature can provide any kind of relief necessary. And that would be extremely broad, giving power to the legislature. Then we could do caps, we could do even potentially change the manner of assessment, just lots and lots of power. On the other hand, the constitutional amendment could be written very specifically, and that the legislature, with respect to residential property, can implement caps, for example, or a different assessment ratio, very specific. And so can we get your thinking about whether you're thinking specific or broad, and open that back up to the committee? Representative Young, I'll start with you.
Mr. Chairman, I'm thinking a bit more specific. So I think it would be, and I did forward to the working group language that Josh already drafted, but one that would allow you to adjust the assessment rate and would allow you to create exemptions. So it's a little more than just one bit, but it does allow you to create exemptions or other subclasses. I do worry, so that might broaden it and open it up to caps, but I think that my interest is try to be as fiscally responsible with how we allocate or how we generate revenue, and I don't want to necessarily provide too much relief when it will end up hurting all the things that we need to fund in schools, but I do want to target relief to those who need it most. And so I would like to see it as tight as possible, but still allowing some leeway to provide the options that we need to provide.
Yeah, fair enough. And I see your hands up, Representative Sweeney. I'm just going to comment once. I think in terms of our thinking, you have to think about what actually would pass a ballot measure. And you can expect that industry and the mineral industry and other folks will be very upset if the relief is too generous, so to speak, or too loosey-goosey. And they would oppose a ballot measure. As we know, in Wyoming, a ballot measure, a constitutional change is actually very difficult to do. It requires more than half of the people actually voting to pass it, so that you cannot leave your ballot blank, which so many people do on the constitutional amendment. So it's pretty easy for opponents to raise doubts and talk about bad implications. So we have to be careful. That might be one reason to have it narrow. Back to you, Representative Sweeney.
Thank you, Mr. Chairman. So I was thinking a little tighter. I wasn't thinking about it in this portion. I just wanted to sort out, in thinking about this, residential separately, and then allow the legislature in general, if I don't know if we need a cap, if you're able to reduce, say down, currently it's at 9.5 for residential because it's contained within the other. Can you reduce it, say, to 6.5 or 7.5 and still remain within the 4%? And will that be enough relief for residential? The majority of the state, you've got to leave some of the high income areas out of the thought process, but that's where a lot of our school funding comes from, especially Teton County. But that's I was thinking a little narrower, and then deal with the cap situation separately.
Okay, it sounds like we're at narrow. And just to respond to your question, Representative Cheney, did I just call you Cheney? I'm so sorry.
Yeah.
Sweeney, I apologize.
It's okay with me. Yeah.
I don't know where that came from, and I apologize. Absolutely, it would depend on how we draft the amendment. But you could say you could raise the 4% to 5% for just for residential, and everything else is within 4%. I mean, it can be written in many ways, but the easiest, simplest thing to do is just to take residential out of the all other property And then to keep it and keep everything else within the 4%, and that would, you could get down to 7.5% for residential, while all other property would be assessed at 9.5%. And then of course, industrial property at 11.5%. So that's maybe the easiest one to look at. Perhaps, I don't know. Josh, we'll go back to you, Representative.
That's exactly, I just didn't frame it very well, but that's kind of what I was leaning towards.
Okay, Representative Yen.
Thank you, Mr. Chairman. So one other question that I forgot to ask about was the proposal from both, I think, the assessors and the commissioners of moving to monthly payments. I think that would be relatively easy, but I would like to hear from Director Henson on if there are any roadblocks with that. We don't have treasurers, but I think Director Henson's.
Can we take that topic and we'll definitely keep it on the table and just set it aside for just a minute? Representative Jennings has his hand up, and let's hear what he has to say, I think, about the constitutional amendment, and we'll talk about the monthly.
Well, actually, I was thinking you were going to wrap that up and I was going to move to the next one.
Let's hear what you're moving to. Go ahead.
I think if we're going to look at that, I mean, most of these like deferrals and things like that, they're not really the relief that we're wanting to look at. And so obviously I'd be for going back to this acquisition study bill, because I don't see that you can make a long-term decision on this if you don't have the information. And so I would recommend the committee also consider that.
Okay, that's fair enough. Representative Sweeney's back up. And did I see another hand somewhere in staff or department? Not yet. Okay, Representative Sweeney. And then
So I totally agree with Representative Jennings on we need that study bill. I don't think we can go directly to a constitutional amendment on acquisition value unless we have a number of answers that we would need to give the public and fellow legislators to get a constitutional amendment just through the legislature. So it's very important that the next legislature, in my mind, studies this during next interim, even if we have to hire an outside consultant, because I think our LSO is overloaded now. And so it may take a consultant. But I think it's very important. And then during the budget session, push through in the 2024 session, push through the constitutional amendment if it could be popular. So
fair enough. Representative Gray.
Thank you. Mr. Chairman, I just want to say that I support the acquisition study bill. And I also, somebody correct me here. I guess I'll ask Representative Yin this, but the constitutional amendment, I think, would allow an acquisition value to be implemented via statute. That's the way I read it if it passed. So that's another approach to implementing that. Thank you.
Yes, and just be correct. I thought we kind of honed in on that. We're just talking about changing the assessment ratio for residential. So I'm not being combative. I'm just saying we have to settle this out. The one thing we don't want is to end up with competing constitutional amendments on the ballot with respect to tax relief for residential customers. And so we don't, and you can get in trouble that way by passing one in the general session and then deciding in the budget session that you want to pass a different one. And so they can become cumulative and they're both on the ballot. I'm just pointing out something we got to think ahead about. So that if the acquisition amendment can't be done until after the general session, it needs to be done in the budget session, fair enough. But for the same purpose, you may not want to pass the other amendment about the assessment ratio in the general session, because you can end up with two constitutional amendments on the ballot that both could be passed, or people might view them competitively and they might cost votes for the other. It's just a housekeeping kind of point out, something to think about. Representative Sweeney.
Well, my intention certainly wasn't to open the residential. My thought process on the constitutional amendment wasn't that broad to allow, if it got passed through the legislature and the citizens in 2024, that it automatically approved, as Representative Gray is saying, the acquisition value to just boom, it's there. That was not my intent.
I think I understand Representative Gray.
Yeah, so thank you, Mr. Chairman. I was saying something different, which is that the constitutional amendment would allow the implementation of an acquisition value via statutory mechanism. So as I look at it closer, I think you might, the argument would be that full value is still there. So that argument on the opposite end, but I have a different interpretation of what full value means, and I've had that for a long time. But yeah, okay. I mean, I just want to be clear on what I said, which is that it would be drafted in a way that would allow an implementation of an acquisition value via statutory mechanism, which you could do if you revise the full value a little bit.
Fair enough. I think we can draft a constitutional amendment to encompass all these things, but all I'm pointing out is that it makes it a little bit broader. And so we've had the broadening discussion versus the narrowing. The way to do it on point is to directly take on the market value and say that notwithstanding the market value section of the Constitution, residential property can be done this way, as well as allow for a different assessment ratio. So
I want to make it perfectly clear. I
Sweeney.
am not asking for any. All I'm asking for is a constitutional amendment to move residential out of other, and whatever anybody else's interpretation, that is not my interpretation. I'm not going to be a party of any of that. So
all fair enough. It's more than semantics, though, you guys. I think if you're going to address getting away from market value, then you're going to need to be specific about that in your constitutional amendment. And if you want to just pull residential out and use a different assessment ratio, that's a different animal as well. But the best way, the constitutional amendment is actually the easy part, I suppose. And we can do that and think about that even at our December meeting. We can have some thinking about that at our September meeting. But if you draft a constitutional amendment now for the September meeting, we'll be arguing about the same argument. So I'm thinking it might be better to wait. We have more information. But Representative Yen.
So, Mr. Chairman, I mean, are you thinking that the proposal should just be start with a draft of a tighter constitutional amendment, and if the committee decides that it wants to expand on that constitutional amendment more, it could do that as a committee, but as a working group proposal, we would just start with a split it out or not propose it at all from the working group?
Either way will work. It'll certainly all work. But I'm definitely hearing different things from the members of the working group about what the implications are and where they want to go. So it might be way better to see where the committee lands on this and then back into the constitutional amendment. Either way works. Having it written down on a piece of paper is easy enough to think about and gives people something to think about. I'm okay with that. Okay, so what other proposals would we really like to move forward? I definitely heard acquisition study bill loud and clear. I think we definitely have that. We definitely have the tax relief proposal, the existing program funding the Christmas bonus program. I heard that. I hear that we do want to do something with residential, but we're not quite sure whether it is just related to the assessment ratio and pulling it out, or whether we're actually going to take on the market value versus acquisition value. And I understand that some members think it's all included and connected, and it's not separate. I see it as separate, but we can have that discussion. And then I was going to ask what else proposals we have that we want to move forward. Representative Gray.
You, Chairman Case, I'm interested in moving forward this $50,000, tax credit. I think it's a medium-term valve, and I think it's interesting. I think the constitutional interpretation is something we can get done. So, in providing some relief, so I would be interested in moving that one forward.
Excellent, and I think that's my co-chairman's not on the call, but I believe that was one of his favorites as well. And I think, Josh, the conventional thinking is we need to structure that as an exemption. At least we have the words in the Constitution to protect us if we do that. Is that a doable bill by September?
I'll have to look into that one. I think we could probably get that done. That one might take a little bit of work. I'll look into it the next day or two and see. I do think it's better to structure it as an exemption. It's somewhat semantics if you call it a credit or an exemption. There's a little bit of a different way that it's applied, but I do think that gives the best defense given Article 15, Section 12.
That's good, Josh. And you guys just thinking out loud, if LSO can't get a bill, I bet they could get a little thinking memo on this, working with the Department of Revenue. So, but Representative Sweeney. You're muted, sir. Representative Sweeney, you're on mute.
For some, that's much better. Chairman Case, do we need something on monthly tax payments?
Yeah, it's a good time to talk about that. Absolutely. I don't know if going to monthly tax payments is a problem like going to ad valorem, when we started collecting that monthly. I don't know if it's that big of a problem. I'm hoping not, but I think we've got the wrong people at the table. We need to have the treasurers come talk to us about monthly tax payments. But I can see that we have Assessor Huxtable wants to weigh in. Assessor Huxtable.
Chairman Case, I did just reach out to my treasurer via an email to ask the difficulties of just being allowed to accept monthly payments versus making a requirement that there was language that they had to be allowed to. I mean, I think it might be just as, I'm hoping it would be as simple as them being able to accept the monthly payments if the taxpayer so chose, and then put the language out there. And the reason we were pushing for the monthly payments, I know there was some discussion about mortgages, but a lot of the people in my jurisdiction that had complaints about values and tax increases don't have mortgages. They're the elderly that are on a fixed income and there is no mortgage on their property. So they come in twice a year to pay their taxes, or once a year at the end of December. And if they had the option of saying, when they got the bill, that you can pay this monthly if you choose to, can the treasurers accept that? And I reached out to Joel, but I've not heard back. So that's where we were going with this, rather than making it a whole convoluted thing, is just saying, can they accept monthly payments and make that work? That's where we were going.
Thank you, Assessor Huxtable. I do recall one time I had a constituent issue where they couldn't pay all their taxes, but they wanted to pay part of their taxes and they wanted to make a good faith, and the assessor couldn't do it, or the treasurer couldn't do it. I remember that at the time. But that's a good point. Let's hear from the treasurers. You guys, what we can do is have this topic on our next meeting and have the treasurers come along with any other folks and get to the bottom of it. I don't think we can solve the bill draft by our next meeting problem, but it's a great topic and we'll put it on the agenda. Representative Sweeney, did you have a follow-up? And then
well, there also on the assessors list, valuation caps. We've already talked about the acquisition value. and assessment rates, that's different. And then lastly, also on their list was full disclosure.
Right. We have a past bill on full disclosure, and we can certainly add that to our agenda. And I'm right on that, right? Josh, I know there's a full disclosure bill out there somewhere.
Yeah, that's correct, Mr. Chairman. I think we looked at it last year, I think. But yeah.
We can certainly do that. Anything else, Representative Sweeney?
No, I think that, I think for this was all of my notes. So
Okay.
are we, one last question on the constitutional amendment, gonna have something in draft form? Is that the thought process on these different, if they're readily available, draft form, or push that at this meeting for our last meeting?
Representative Sweeney, I don't entirely have the answer to that, because I do think that the structure of the constitutional amendment is going to limit what we can do legislatively. And I kind of go back to the way I kicked that off. Do we want it to be broad or narrow? And when I said we could make it broad, just about everybody jumped on and said they wanted to make it narrow. Some wanted it narrow in terms of just being the assessment ratio for residential. Others said I just want to do the acquisition values narrow, but they're conflicting if we have two different amendments. So I'm open to the committee how you want to try to work through that. We could look at different language, but LSO would have to waste a little bit of time. I don't waste, it's not totally a waste, but to produce 2 or 3 different amendments, it's pretty time intensive. Josh, I throw it back to you. Part of me says, why don't we wait till the December meeting on the actual amendments, because we'll have more idea. But Josh, what is your thoughts about the workload and things like that?
Yeah, sure thing, Mr. Chairman. Like Representative Ian said, I already drafted one version of this for him. I do have another draft for another member not on this committee that takes a slightly different approach, but on that same idea. So could present either or both of those at the committee, or and just as an idea of a starting point, or we could just discuss in general and have more specific direction come out of the committee. So either way you want to approach it, as good with me, Mr. Chairman.
So you guys, sounds like this will not take a lot of work, so we certainly could look at constitutional amendments at our September meeting. I might caution us about taking final votes on the constitutional amendments at our September meeting. Just kind of trust me on this. I can just see us getting jammed up and having the wrong amendment in the queue. But certainly we can look at the drafts. Absolutely. Representative Gray.
Thank you, Mr. Chairman. I just want to make my position clear. You know, I was a little confused on what exactly this narrow versus broad, what that means, but whether or not I'm in broad or narrow, I think I'm in broader, because I would like to draft one that clarifies what full value means and allows you know, some other mechanisms like caps and acquisition value. So I think that puts me in broad, because I don't think that's quite in Representative Yin's draft. I'm not sure whether Representative Yin's draft is narrow or broad. If someone could help define that, I would appreciate it. Or maybe it's just kind of a, you know, kind of a designation we have out there. But what exactly is, you know, if you were to take a nice chart, I mean, what is in narrow versus broad? Thank you.
Thank you. That's a good point. Representative Yin, you want to clarify what your draft request is?
Mr. Chairman, thank you. So the draft that I have requested does split out a couple of things. So I would say it's kind of in the middle, right? So I don't think it actually allows fully for caps. I think because of that market value requirement is still in there. I think when Senator Case and Mr. Chairman, maybe you can correct me, when you're talking about narrow, you're basically just saying only make it so we separate that one class out and literally that's it. And that would mean that the only thing we adjust separately is that we allow that 9.5% to change differential to commercial, and the rest of all other. When it comes to what could be more broad, so in my draft, it makes it a little more broad because it kind of makes it a little bit more explicit on allowing exemptions for the class. And then it also allows for quote unquote subclasses to be prescribed by law. So that does make it more open to different types of statutes that could fall under that constitutional amendment. But it isn't as narrow, I think, as Senator Case was thinking, where you just keep it super focused on the tax rate itself.
Okay, fair enough. I think I get it. But I do think Representative Gray, it doesn't allow for the acquisition value because it doesn't, you'd still have the requirement of market value for all your things there. Representative Gray.
Yeah, thank you, Mr. Chairman. I would, I think on the interpretation that LSO has provided, I agree with that. And my preference would be if we're going to have an amendment, to loosen that up as well. Not that that would allow for implementation of it, because it would still need to pass the legislature and be signed into law, but that we would also provide some clarification on market value that would allow for caps and or an acquisition value system. I think we should just handle it all if we're going to do that. Thank you.
Got it. So thank you very much. That would be what I call broad, and that's perfectly acceptable. So Josh, do you think with the two drafts that you already have requested for the constitutional amendment, does it encompass both sides of this discussion we've had?
Mr. Chairman, I don't think either of them would explicitly address the full value part of that that Representative Gray was referencing. Certainly be added to either of them likely, but neither of the ones that I've worked on so far has taken that approach.
Okay.
Certainly be done.
Could you just, you said that one draft is requested by another legislator. Could we get their permission to look at it with the committee, and then maybe you could take that draft and make a third draft that extends all the way to the market value approach?
Sure thing, Mr. Chairman. I'd be happy to do that. We'll reach out to the requester of that draft and make sure that they're okay sharing that.
Okay. Does that work for you? I think it catches the continuum. I hope it does. But remember, it would be foolish, I think, to vote on a bill as a final bill in September on a constitutional amendment because there's so much in play. Representative Sweeney.
Could I request a narrowly crafted? It doesn't sound like any of these constitutional amendments are very narrow in scope, and my request would be very narrow, simply moving my belief, and I'm ignorant on a lot of stuff, but when it comes to the law, but my thought process is if residential is moved out of the other class and having its own classification, then the relief could come by the legislature adjusting that segment as it's still being fair and equitable on a percentage point basis. So that
right. I think you're exactly right and on target. I kind of like your idea. And what it would allow under our existing constitution would be to take the residential class down to 7.5% if we kept the other ratios on the assessment ratio. So Josh, how hard would that one be to do? And let me tag on, rather than requiring Josh to provide the committee with complete bill drafts about constitutional amendments, if you just provide the language about the constitutional change, would that be okay with everybody? Because that would eliminate having to do ballot statements and all that other stuff. It'd make his job easier and give us the flavor of what we're going at. But I'll go back to you on that, Josh. Representative Sweeney's proposal, the very narrow one.
Sure thing, Mr. Chairman. I could present that as, a proposed amendment to one of the drafts that's already prepared or similar. I think that would be an easy way to do it.
I think so too, and I agree. So if everybody's good with that, anything else that you want to move forward to have the full committee decide to look at? Representative Gray.
Thank you, Mr. Chairman. I think we've approved the acquisition study concept. I guess one thing I would, and I'm very supportive of that. One thing I would say is I do think we should provide a little more guidance in the bill than was about what exactly we're looking for. And I think we're putting, and Ms. Henson maybe wants to weigh in or maybe not, but I just think we're putting them in a position where one, it's very unclear. And I'm sure there'd be some oversight from the Joint Revenue Committee, but I think we should put a little more language in there. From that original bill on things we're looking for. Like one of the things I want to look for is how this looks on the ground in different cases, and then a really robust estimate on the effects statewide and to the different flows. But I just think there was a little. That more could be there. So thanks.
So Representative Gray, help me a little bit. I see that it's kind of thin out there, but a lot of it depends on some issues like does it reset if the property's sold? It goes to the new acquisition value. I mean, for example, could we maybe decide that or not? I'm trying to understand why that wouldn't be an important positive thing to add that prevents it from getting so far out of whack. But I'll throw that to you.
Thank you, Mr. Chairman. Yeah, and I think one of my concerns is the assumptions that the DOR is going to make are going to be totally different from the mechanism that most legislators are leaning towards. And I know there'll be that communication but maybe it's a menu of things, but I just thought the original bill, while I certainly love its intent and I supported it and would support it as original language. I think it would be nice and in the committee, it was a little too late last year, but maybe if Ms. Henson could testify on, I see the hand up now, if she could let us know if there's something more things she wants in there. Cause I thought it was a little bit unclear and, if we're going to put some investment into this to get something back that isn't really what we're asking for would be unfortunate. Thank you.
Thank you, Representative Gray. Certainly good suggestion to go to Ms. Henson. Director Henson.
Mr. Chairman, Representative Gray. So in considering acquisition value as a basis for taxation, I think the Department of Revenue, in working in conjunction with county assessors, could definitely put a list of questions together that we would have in our mind as to those policy type decisions that we would need the legislature to answer. But I truly appreciate the comment earlier about having a private sector party do the acquisition study itself and what it would mean to the state of Wyoming. We're all in the weeds, as I would state. We all have history in the state of Wyoming. And I think that the credibility of that study, if it were done from an outside party, would lend itself well to the legislators feeling very comfortable about that. I certainly don't want this study, because it's so important. I don't want it to have any preconceived notions that the Department of Revenue thought this or the Department of Revenue thought that. And so if that perhaps could be in that bill, that we just fund it independently.
Okay, I think that was very, very well done, wise. Representative Sweeney.
That was the perfect segue, because I was going to ask again, because I know there's folks out there that in the legislature that would want LSO to try to do this thing, and we've got to be cognizant of our staff's time. And I think the independent review is a great idea. And but would there be a number, a dollar number that perhaps staff could look into? Is it 25,000, 50,000, 100,000, 500,000 that's part of the study bill? I am not looking to kill the bill. I am looking to be fair and equitable on this thing, and I want it to move forward. But if I could request that in a LSO, that would be helpful, I think, in considering it.
Okay, let's ask the committee. Committee, do you all agree kind of on this thinking that our study bill would be with a third-party vendor, national accounting firm or something like that, to do the work, and so we would come up with a kind of like a scope of work and what they're to study and when the reports due, and kind of do that. I personally would support the idea. I think it does solve some problems, some political problems. But Representative Sweeney, you got your hand up, I saw.
I'm voting.
Oh, that's an aye. Yeah. So Josh, can you think about the pitfalls and maybe developing something that would be in kind of an RFP? One thing that strikes me is that we still have to define what we want them to study. We're not escaping that. And that's going to take a little bit more work. And I suspect, I don't see this scope of work being done by the time we get to our September meeting. We may have to spend some time on what that scope looks like, but we might be able to have the LSO take a crack at the draft for the scope of work and share it with the committee and the assessors and the Department of Revenue and others before we get to the committee. Is that feasible, Josh?
We can certainly make an effort. I was just going to note that, last time this bill went through last year, it was a study housed out of the Department of Revenue. So I guess that would be one question: is do you want them to take the lead on that and hire a consultant? Do you want LSO to take the lead and hire a consultant? The last bill did not provide any funding for the hiring of a consultant, but that's certainly been something that's been done in other bills. So again, all questions we could do. I think the Department of Revenue and the county assessors would likely have a lot of input on like Brenda, Ms. Henson said, is what kind of questions they would like answered in this study. And so I don't know how much we can get done of that between now and the middle of the month, but we can certainly take a crack at it.
Yes. So Representative Gray, your thoughts about where it should be housed and anything else?
Well, thank you, Mr. Chairman. I guess I was more talking about being specific on the scope of work. I'm not entirely convinced. I maybe could be convinced, but I'm not entirely convinced. I mean, one of the lessons I've learned in the legislature is that these high-priced, out-of-pocket studies don't necessarily come back with better results. I mean, I think that the cost doesn't always, it's not always us, getting what we paid for on that. So I do think the chances of success goes up if we, and I like what Chairman Case was saying, that rather than us pass some bill and then, it go out to RFP in April as kind of people have gone back home, I think it's good for the committee to look at some draft RFP language if we're going to go this direction ahead of the bill passing. And that means, and I think that's helpful regardless, whether they end up going with the DOR direction or out of another direction with somebody, with, some other folks. But I think that a lot of it depends on this upfront work. If we just pass a bill and then say, well, LSO or the DR is going to do this, and it's in March and April, and then the contract goes into in May. From what I've seen, a lot of times the legislature's intent, and this isn't directed towards anybody in particular, it's just a lot of times it gets lost in that March and April thing. what comes back in the study was certainly not what I thought the direction we were going to go towards. So it's good. I like that direction of getting us even looking at scope of work, whether I think that's helpful either way we go. So thank you.
Thank you. Anybody else? So, Josh, I guess it comes down to, we need some kind of a statement of what we're going to study that we can have for the beginning of the talking points by the middle of the month. We don't need a bill, but we need to know what questions we're asking. And the assessors are going to weigh in on that, and the Department of Revenue is going to weigh in on that, and others may weigh in on that. We sort of need a running draft of what the questions are. Do you think we could at least get something started that we could amend at this September meeting?
Sure thing, Mr. Chairman. I think the department is here and some of the assessors are here, so certainly ask them I'll be in touch with them, and we can see what kind of list of information we can put together between now and September 15th.
Okay, excellent. Director Henson, then we'll go to Rep. Sweeney.
Mr. Chairman, maybe I'm thinking too simplistic here, but I guess stepping back, if we were to have an outside firm, is it a question of, is acquisition value a prudent way for the state of Wyoming to move towards for a basis for property taxation? Or is that study tell us specifically what would need to be done to implement acquisition value as a basis for taxation, and what the revenue impacts may or may not be? But to me, those are two separate questions, and just trying to get my arms around what the committee is asking.
I'm thinking more of the latter, Director Henson. I think the committee's pretty strong that they want to look into this and get the implications of it. I think we could make some arguments about why it's not a good idea, and it's the alta kilter piece, but anyway.
I just think it needs to be, the study itself and our request needs to be worded such that
an
independent person knows which path they're going down, because you could spend a lot of time on answers we don't want from them.
I agree. So we'll go to Representative Sweeney next, and then Ms. Huxtable's got her hand up. We'll go to her after that. Representative Sweeney.
So I agree with you, Mr. Chairman, on, I think it needs to have both those factors, but I would appreciate if Representative Jennings, this was his initial request in the House revenue, on if he's got additional thoughts, and other than what maybe, and perhaps Representative Gray's already discussed your thoughts, Representative Jennings.
I got a nod from Representative Jennings.
Well, Mr. Chairman,
Go ahead.
I do think that's good, and I'd like to go down that path so that we are more specific into what that looks like. And it didn't touch on both sides of that, if you know what it might look like, but from the other side, but the real scope is, what would that look like if you went down that path of implementation?
Fair enough. Thank you, Representative Jennings. Let's get Ms. Huxtable, Assessor Huxtable.
Mr. Chairman, members of the committee, just a point on the timing. We do have a meeting coming up at Waco at the end of September, which I guess is this month technically now. And that would be a great opportunity for us to be able to put together a list of things if we knew which direction we are kind of going. So, you know, in response to Director Henson's point, you know, if we had some direction from the September meeting of what the Joint Revenue Committee would, you know, if they want the exact details of how we would implement it, what the questions we would have, or questions on what kind of changes would be necessary. Those may be two different topics, and we're happy to give you whatever answers we can after we have that Waco meeting, which is scheduled for the end of September after the joint revenue meeting. So just want to give you a timeline of when we could get those specific things back to you in a formal, uniform group where we had the entire association behind us.
Great, and we appreciate it. I think we're going to kind of nudge forward. We're asking staff to kind of help us with the list of the questions by getting some preliminary questions from you guys, as well as the department and others that we're going to discuss in September. It'll still be kind of up in the air, and we'll probably get more staff direction. And your organization certainly will be able to take where we're at the end of the September meeting and give us more advice and counsel, with the idea that we're trying to actually pass something at our last meeting, most likely in November or December. It's not perfect, but I think it'll help us to move it forward. That's okay. Did I see Assessor Davis?
Yes, Mr. Chairman, if Mr. Anderson could get that information to us, I will forward it out to our group, and we'll get all of our responses put together and sent back to the committee, and we'll do the best we can to help with any information we can provide.
Okay, great. Representative Sweeney.
It's sounding to me like our November, December meeting is going to need to be 3 days. Just to throw that out there, Senator Case. So something perhaps for the chairman to ask of management council. So
that could possibly be. I'm used to some pretty long days. I always try to give the taxpayer their dollars worth. So I think I've had the record for the longest meetings. But it's a fair question. But let's see where we get on September and how things fall in and fall out, and deal with our September meeting and agenda, and then we'll have time to make that call. And certainly it's worth considering. What else? Is there anything else? Josh?
I just wanted to jump in here. So currently, I know we've mentioned a couple of times November or December. We're currently at least tentatively on the schedule for November 21st and 22nd.
Okay.
So I just want to mention that as we're having this discussion right now, but
and that's probably better, you guys, because we do have a general session. We're going to be starting second week in January, so staff will need that month. So it's better to stick with the November timeframe. All right. This has been a very interesting, good meeting, and I really appreciate the participation of everybody and the thoughtful comments. Would there be anything else for the good of the order? Anything else we have to touch base on? I think you've done some good work trying to filter this all down, and I appreciate it. I want to thank the staff. Emily, thank you for wrangling all this stuff. And Dean and Josh, thank you for the good work. Members, Department of Revenue and assessors, thank you all. Members of the public. Is there anything else that we need to cover? Any lasting thoughts? All right. I think we got our marching orders. I greatly appreciate everybody today, and we will see you in a couple weeks in Casper. All the best. We'll sign off. Emily?